This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say, based on this research, to buy as much as possible before December 1st. The company is ticker symbol FROG, Frog. They're a software company. They do DevOps, so basically the SaaS infrastructure, the cloud infrastructure that you can access through Amazon Web Services, Google Cloud. They're kind of like GitLab. GitHub is a developer. GitHub is like LinkedIn for developers, but it's also a place to store and have revisions of code, which you can imagine is pretty important as you're working with a team and going forward and backward in terms of changes and edits. You need to all be on the same page, literally web page or app page. Frog is like that. It's a new company. Well, it's not. It came out in 2021, but they have 130 million of revenue, up 25% year over year, and half of that is cloud revenue. So they're in the right category for right now, and they recently had earnings, and they're holding up super well. Now, I know not everyone is excited about software right now with all the attention going into the AI type companies. DevOps does use some AI for continuous monitoring, fraud detection, but in general, this is more of a boilerplate software company. So there's another company, ASTS. It's a space telecom provider. It's similar to think Starlink or think the SpaceX space. This company is also relatively young. These are the 2021 class of companies. And it's not doing excellent after earnings. It had a little bit of a bottoming, which is an opportunity to buy, in my opinion. I wouldn't generally say to buy a dip, but this is at a favorable spot, which I'll show in the chart. And they have over $1 billion in contracted revenue. So that's solid, even though their actual revenue that they booked is only in the tens of millions. So with that backlog in place and with about $1 billion or multiple billion of liquidity, this company has a runway. It has expected revenue, and it's in a space where literally, well, no pun intended, whatever, SpaceX has paved the way. So let's jump into these two tickers. I think they are very early, both of them. It's not financial advice, but I hope this helps. Here we go.
This is Sam Putnam.
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 Okay, so let's talk about Frog here. It's 130 million in revenue, up 25% year over year. Half of that's cloud revenue, up 50% year over year. That's a big jump over the prior year, which would be the percentage of revenue that it accounts for. That increased. So this is good. This is what you want out of a software company. I mean, cloud was kind of the 2010s new thing, right? It was mobile first, and then it became cloud first, and now it's AI first. You might say the cloud thing was kind of going on through the whole past decade or so plus, but cloud is a buzzword, and now it's almost seems like a par for the course type of offering. I mean, even IBM is getting a lot of revenue through the cloud, even though they were known for on-prem. So this company, Frog, this is sort of paints the picture pretty clearly. 71 customers with over 1 million in annual recurring revenue. So they definitely have a lot of, I mean, it kind of gives away that they have a lot of small customers, right? Because it says they have 5,000 customers over here. So a lot of these, this is very much like a GitLab or a GitHub. Someone who's a developer is going to roast me in the comments for not differentiating more between GitHub and GitLab. But for our purposes, this is a DevOps solution for enterprise. So GitLab is the better analog. And they have these products you can use. I don't know if binaries is exactly what the word we want to use, but basically you can load their package or their shell or whatever, and they have a bunch of packages that come with that. So in business speak, it's kind of like having a pre-built house that you can just, start to build on top of, rather than just starting from scratch, which is a big deal when you're trying to build enterprise software. So that's what they do. Continuous updates is also very similar to, I'm going to say GitHub again, which is basically making revisions and changes without messing up everything you've done before and making sure you document it really well. So we're not going to get lost in the coding sauce here. This is the chart. And just as an investor, this thing has gone up since, 2023. Of course, 2022 was not a good year for all stocks. And this being a tech stock, a software stock, this thing came down a lot since 2021. So no surprises there. Most recently, we can see after earnings reactions, it kind of runs sideways for a lot. Of course, it depends on the earnings reaction. We don't have to read into this one too much. What we can say is here was the earnings, and it's holding up pretty well considering if we look at QQQ over the past couple weeks, just barely coming back to break even. The small cap space is doing a little bit better. Gold is doing well right now, but just the SPY or the NASDAQ or whatever you want to call it hasn't really done much. We're pretty much where we were a couple of weeks ago with a lot of hiccups. So this is not a bad earnings reaction, even though it looks like it hasn't gone anywhere. Well, it hasn't really gone anywhere in aggregate. But we have this close here on November 6th. So that is definitely a good spot to risk off of right here. $60 just about. And we're right near $60. So you risk $1, you try to make 10. That's the name of the game with Frog. And it's in a space where I don't think everyone's forgotten about software. It's just that there's less euphoria about it, which is fine. That's a good thing. User expansion is over 100%, aka they're not churning more than they're adding, so they're growing. That's good. They do have this loss, but that's kind of very common for software companies as they grow. And 130 million is a lot of revenue. So here's some similar tickers. GCT is one that is maybe the most similar just in the way that the chart is setting up. They're not exactly like GCT, but this is the peer that I mentioned, GitLab, which is probably the closest analog. But if we do look at GCT, here's GCT in a nutshell, but the chart really tells the story. So it is a software company, it is a cloud company, and it is enterprise. So it's a B2B company. It's sort of like an e-commerce, Alibaba, AliExpress, 3PL payments logistics service for e-commerce to basically manage all their different SKUs. So this is the chart, though. This is why it comes to mind. If we look at the chart right now, we can see there's recent activity, recent earnings, pretty similar to Frog, actually a much stronger earnings reaction than Frog in the past couple weeks. So that's definitely interesting. Now, I'm not saying Frog's definitely going to do that. I'm just saying that they're both software names that reported earnings and went up recently. So people are definitely looking at both of them, and they're both mainly cloud companies. Frog recently entering that category. ASTS is the other company, and that's what the chart looks like. You can see from that chart that it's looking for a bounce. $1 billion in contracted revenue commitments. They are a space company, broadband network. So basically, there should be no connectivity gaps for people who have cell phones, and they're also bringing broadband to, democratizing it to everyone in the world, basically, who can access a cell phone. So Starlink is definitely a really good analog for this company, although they don't have much going on yet. Revenue of 15 million for the quarter. It's up year over year, like 15 times, but didn't beat expectation. They did report a loss, and $1 billion in contracted revenue commitments, $3 billion in liquidity. So there are some challenges. This would be great if we could hear something about government contracts for this company. That would be very reassuring for the stock price, considering they just have that 15 million of revenue otherwise. They're guiding high for through the end of this year, and we're continuing to look for launches and any sort of network successes. So there's some risks. The actual earnings wasn't great, but if we can get some more news out that can be positive, product updates, government contracts, etc., this is good for this company. Rocket Lab is definitely in the conversation as well. Lunar as well. And Rocket Lab you can't really buy right now. Rocket Lab looks like trash, in my opinion. I mean, ASTS looks similar, but at the very least, there's sort of a left side peak for ASTS here. That is probably the realist, most reasonable level, 55 to buy it off of. Rocket Lab, I guess you could say there is something, over here you're buying it off of, but there's no peak. So you're just looking for this other low, and then you're buying it off a moving average, which I don't love that. Not to mention this earnings reaction is really rough. I mean, ASTS wasn't great either, but at least you do have this level right here that it's getting above. This level sort of will be interesting as well. So big move up, 170%, down, whatever the same is. Rocket Lab a little bit less euphoric, up 50%, down some. This is just a choppy stock to trade in general. And one other stock that is in the same conversation is Lunar, which has had big moves based on launches. Right now, it's pretty much not in the conversation at all based on how it's moving. And the SpaceX holding company also is not interesting, DXYZ. So ASTS is definitely kind of in its league of its own right now. And there's not a lot of volume, but there's enough liquidity that it's definitely worth looking at. And it actually has kind of a similar look to stocks like Wolf, which were speculation names, Bitcoin miners turned data center names that went up recently and came back and then had a bounce. Okay. Cypher as well. And then Iron also, which I'll mention, but looking for that bounce as well. So some of these names, quantum names, you just really ought to abandon. Same with rare earth names. They're kind of out of the conversation right now. But ASTS does have those levels where it's starting to get interesting again, and it hasn't had 4 green days in a row to totally make it unbuyable. So it's sort of an opportunity to jump in without, it being overbought. And it's also not really a falling knife because it sort of is creeping up the last few days. So we don't have to be wedded to this company. VSAT is another one I didn't mention that's in the conversation for sure. Satellite companies, broadband. This is kind of ugly. It did have 3 green days in a row. It's not really as opportunistic as ASTS in my opinion, but they all do look relatively similar. So I think this is definitely the play right now. Risk $1, look for 10. And if you're more looking for something that has recent earnings that were solid, Frog is the one for you. But if you're not super excited about investing in a software company right now, I don't blame you. If you look at ServiceNow or Salesforce, they're both not doing so hot. So those are the ideas. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I release that in the YouTube post section for subscribers once a month. And if you want to try out that $19 Cyber Monday deal at stockscommunity.com, give that a shot. Check out those testimonials and see if that's for you. See you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.